Welcome to Yap's Money Life Show. Thank you again for your interest and support. Today, I would like to ask you, do you risk your serious money for good to have money? You see, a few days ago, a client complained to me that his investment, his money is growing too slow. He's getting about 7% to 8% annualized return, and yet he still feels that it's growing too slow. And then lately he has been approached by a friend to invest into investment in Brazil, into some kind of property development that promised to give him 16% return a year. And then he need to park the money there for 3 years. So to him, that is like much faster way to grow his money. And then he asked me my opinion. So what I want to do today is to share with you my discussion with him, and hopefully you can learn one point or two from this discussion. Now, see, before I proceed, I need to share with you what is a concept of serious money. Basically, serious money is the amount of money that one person should have to take care of the major and essential financial goals. For example, money required to fund your children's tertiary education. It could be local university or overseas education. It could be also the money that you need to fund for your medical expenses should some of your family member fall sick. And it could be also, very importantly, the money that you need to fund your retirement lifestyle. So these are all money which is what we call serious money. See, and generally for a middle class, say for a middle class who has got maybe 3 or 4 million kind of asset, most likely 95% or 100% of his money here, 3 or 4 million, will be his serious money, and it will be required to fund the essential needs of his life. Okay, but for wealthy people, say for example someone who has got 50 million wealth, chances are serious money is just a small portion of his total wealth. Maybe say 10 million, which is only 20% of his total wealth will be his serious money, which is required to maintain his essential needs and family lifestyle. The rest of the money is extra money that he has. In my client's case, all his money, all his 3 million that he has, all is his serious money. And all this money will be required to fund all the financial, important financial goals that he has got. So this money is no more and no less. So if he were to take, say, a portion of this serious money, say for example 300,000 to invest into high risk investment in Brazil, then if he is so unlucky he were to lose all the 300,000 of this serious money, then he would need to work longer and save more in order to recoup this 300,000. Assuming again, if he can save only say 50,000 a year, then he will need to save for work and save for 6 years to recoup the 300,000. So you may say, what if he succeed and he make a gain? So when he succeed, and he gain, he will make extra money, but this is a good to have money for him. And don't forget, he is taking and he is risking serious money to get this good to have money. You see, for the wealthy people, they can afford to use the good to have money to chase, to gain or to invest so that they can get good to have money. So if they fail, it won't affect their serious money. The serious money is still there. It won't affect their financial security and their lifestyle. But if they succeed, there will be icing on the cake. So if you are the middle class, so you should ask yourself, should you take unnecessary risk on your serious money? In this section, I will answer the question that I received from the viewers, people like you. Okay, so now I have the questions from Mr. Koo. He is from PJ. Now his questions go like this. My child is 13 years old now. I intend to send him to the US and I want to plan for my children's tertiary education. My bank's relationship manager recommended me to put my money into dual currency investment, or layman may call it DCI. So is that the right thing to do? Now, I think for the benefit of the viewers, I need to explain what is DCI. Okay, this DCI basically is an investment whereby you go and bet on the currency movement. So in this case, for this Mr. Khoo, it's a US dollar currency movement. So if you win the bet, you will get some extra return higher than fixed deposit. If you lose the bet, you will end up getting the currency, say for example in this case, US dollar currency. So on the surface, this DCI may sound like the right place or right investment tool for you to use. Why? Because you will receive US dollar that you will need, okay, when you lose the currency bet. Okay. However, you will always get this US dollar at a poorer exchange rate compared to if you were to go and exchange for US dollar from the money changer in the market. So I would think this may not be a very smart thing to do. Since your child is only 13 years old, which to me is rather young, maybe he will need the money when he's 18 or 19 years old. So I would suggest two options for you to consider: to park the money and then to grow the money for funding of his tertiary education. Option number one is that you can convert the money that you have now into US dollar today, okay, and then you will invest into US denominated or US kind of investment asset. So before say 2-3 years before you want to use the money to fund his education, then you will convert the money, convert the investment into cash. So by doing so, you will be able to avoid the volatility of the US currency exchange against ringgit. And but the only setback or downside of this option is that if you are not so familiar with US dollar kind of investment asset, this may not be a suitable option for you. If you are not familiar with US investment asset, I would suggest second option, whereby you will invest your money that you want to provide for your children's education into local investment, say in ringgit based kind of investment. Then 2-3 years before you need to use the money, then only you start converting it to US dollar and put into the US kind of bank account. Okay, so by doing so, you will still be able to grow your money using the investment that you're familiar with, and at the same time, you'll be able to manage the currency volatility as well. Now, in conclusion, DCI or dual currency investment is not the right way for someone to plan for children's tertiary education in overseas. If you want me to answer your most burning question about money, about investing, about wealth management, please feel free to email me your question or WhatsApp me your questions. Now I have a question from Wendy. She is from Ipoh. Her questions go like this. My investment property has been vacant for 3 months. The rent now can only cover 1/3 of my monthly loan repayment. So if I sell now, I might not find a buyer, or I will have to sell at loss. So what should I do? Okay, I must say this is a pretty common problem that investor, especially property investor, face right now. Now, the first question that I would like to ask you, Wendy, is that do you have ability, to continue to pay loan repayment to the bank? Okay, so if your answer is that no, you say I don't have ability to continue to pay. I may not be able to pay some more, because I don't have money to pay the loan repayment already. So if that is the case, I would suggest you to sell the property fast, and even though you have to sell it at a loss. Why am I saying so? Because if you can't pay the loan, can't pay the bank loan, the bank, it's a matter of time, they'll come to repossess your property and they'll sell it at the auction market. And when they sell at the auction market, chances are they may sell your property at even lower price than what you're getting. And that will be very bad for your financial position. Okay. Now, if your answer is that, Mr. Yap, No, yes, no, I have ability to pay the loan. I can continue to pay even until the whole loan finish. Okay, then I have the second question to ask you. My second question is that, do you think this property has a good potential to appreciate in the future? Are there strong factors that give you the reason to believe that this property will grow fast, will grow eventually to make you a good gain in this particular area? If you think the potential is no good, then I would suggest you to even sell now. So even you have to sell it at loss, because the idea is to sell the property now. If you have got some money, then you can still take the money to invest into something else that can give you better return, better potential. Now, if your answer is, oh, this is a good potential, no, and then for that case, I would suggest you maybe to keep the property, hold it, because you have the holding ability. Now, like any investment that we make, whether it's in unit trust, shares, gold, or property, the affordability, or what I call it, the holding power, is very important. When you have holding power, you can hold the property even though you are not getting the rental. But if you don't have a holding power, you have got no choice, and you may end up have to sell the property at loss. So I would suggest that everybody, before you make any investment, okay, especially property, especially when loan is involved, make sure you have the holding power. Okay, so thank you so much for watching. If you wish to learn more about how to grow money with high certainty, please visit my website. If you find this video to be useful, I would suggest you to like, share, and comment. Have a great day. Hey there, if you like my video, please remember to subscribe to my channel.